Hey everyone, welcome back to Corporate Decoder, the place where we rip open these corporate filings to see what is really going on behind the fancy spreadsheets. And this time we've got Winnebago Industries Incorporated, the RV and boat maker, showing us their latest moves. Get ready for some financial journeys because this report has more than just towing capacity. And hey, if you love dissecting these financial documents to get the real story, make sure you are subscribed. We also have a fantastic community over on Discord. Link down in the description where we break down these reports even further. So let's dive into the numbers for Winnebago for the 3 months ending the 29th of November 2025. Things are looking up compared to last year. Net revenues jumped to about $702.7 million. That is a solid 12.3% increase. That means they are selling more RVs and boats. And the good news does not stop there. Their gross profit, which is what is left after they pay for all the materials and labor to make their products, also went up. It hit $89 million, a jump of 15.9%. This is great because it shows they are getting more efficient or they are able to charge more for their products. But here is where it gets really interesting. Last year, in the same period, they actually had an operating loss of $0.9 million. Now, they are showing an operating income of $13.8 million. That is a massive turnaround. It means they are finally making money from their core business operations after all the costs like selling and administration are taken out. This is a huge positive sign for the company's health. Now let's look at the balance sheet. This is like a snapshot of what the company owns and owes. As of the 29th of November 2025, they had about $181.7 million in cash and cash equivalents. That is good to have in uncertain economic times. Their accounts receivable, which is money owed to them by customers, went down to $149.1 million from $192 million. This could mean they are collecting money faster from their dealers. Inventories, however, went up a bit to $415.1 million. This might mean they are building up stock, possibly in anticipation of higher sales, or because it is taking longer to sell. And here is something we see often with companies that have acquired others. They have about $484.2 million in goodwill. This is basically an accounting value for the reputation and brand strength of companies they have bought. It is a significant chunk of their assets, and it is important that they continue to make these brands valuable. Looking at the other side, their total liabilities are $893.6 million. This includes things like money they owe for loans and other obligations. And their total shareholders' equity, which represents the owner's stake in the company, is $1,233.6 million. This is the difference between their assets and liabilities. Let's talk about cash flow. This tells us where the money is coming from and going to. During the 3 months ended the 29th of November 2025, they had $25.4 million in cash provided by operating activities. That is a big improvement from last year when they used $16.7 million in operating activities. This means their day business operations are now generating cash, which is a vital sign of a healthy company. In investing activities, they spent $5.6 million on property, plant, and equipment. This is for things like new machinery or buildings. It is less than last year, which might mean they are being more cautious with spending or are prioritizing other areas. And in financing activities, they used $12.2 million. This is considerably less than the $43.7 million they used last year. This decrease is mainly because they spent much less on buying back their own stock this period. Looking at the statement of changes in shareholders' equity, we can see how the owner's stake in the company has shifted. For the 3 months ended the 29th of November 2025, they had net income of $5.5 million, which increased their retained earnings. Their additional paid-in capital, which is like the extra money investors paid over the stock's face value, remained relatively stable. We also see changes in treasury stock, which is stock the company has bought back. This figure decreased, suggesting they might have bought back a small amount of stock or adjusted for other share-related activities. Now, let's talk about how they are presenting their numbers. Winnebago Industries Incorporated is the parent company, and they are including all their wholly owned subsidiaries in these reports. So what you see is the combined financial picture of the entire Winnebago family. They are using us generally accepted accounting principles, or GAAP, which is the standard way of accounting in the United States. Winnebago has 9 operating segments, but they are grouped into 3 main reportable segments: towable RV, motorhome RV, and marine. This helps investors understand how each part of the business is doing. They also have a corporate subi all other category for things that do not fit neatly into the main segments. This segment includes specialty vehicles and their battery solutions business, along with general corporate expenses like leadership and administration. It is important to note that none of these smaller operating segments have ever been large enough to be considered for separate reporting. Let's look at their segment performance for the 3 months ending the 29th of November, 2025. The Twattable RV segment brought in $293.4 million in net revenues. This is up from $254 million last year, a healthy 15.5% increase. Their operating income in this segment was $11.1 million, up from $8.9 million last year. This shows the towable RV business is growing and becoming more profitable. The motorhome RV segment also saw growth, with net revenues reaching $308.5 million, up from $271.7 million last year, a 13.5% increase. This segment also turned a corner, going from an operating loss of $3.2 million last year to an operating income of $8.2 million. This is a significant improvement and suggests their strategy for the motorhome business is paying off. In the marine segment, net revenues were $92.5 million, a slight increase from $90.5 million last year. However, their operating income in this segment saw a small dip from $6.2 million to $6.1 million. This indicates that while sales are up slightly, profitability has slightly decreased, possibly due to higher costs or less favorable product mix. When it comes to investments, Winnebago has some assets that fund their deferred compensation plans. These are mainly in equity funds. The total fair value of these assets was about $2.2 million as of the 29th of November 2025. These are classified as level 1 assets because they are traded on active markets with readily available prices, making them easy to value. Let's talk about inventories. As of the 29th of November 2025, their total inventory was $469 million. This includes finished goods, work in process, and raw materials. They use a mix of LIFO and FIFO accounting methods. It is important to note that their inventory has increased, which we touched on earlier. This could be a strategic move to ensure they have enough stock to meet demand, or it could tie up more cash than desired. Their property, plant, and equipment, which includes things like buildings and machinery, is valued at $327.9 million after accounting for depreciation. Depreciation expense for the quarter was around $9.8 million. As we saw on the balance sheet, goodwill is a substantial part of their assets, sitting at $484.2 million. They also have other intangible assets like trade names, dealer networks, and customer relationships valued at $451.5 million. These intangible assets are important for brand recognition and future earnings. They expect to amortize about $16.2 million of these assets in the remainder of fiscal 2026. Winnebago provides warranties on its products. The provision for warranties in the 3 months ending the 29th of November 2025 was $25.5 million. The total warranty liability at the end of the period was $73.8 million. This is a significant amount, and it is important for them to manage these costs effectively. Now, for the debt, they have senior secured notes totaling $200 million and convertible notes totaling $350 million, making for a total of $550 million. The ABL credit facility, which is a revolving line of credit, was undrawn as of the 29th of November 2025, meaning they had not borrowed anything on it, which is a good sign of liquidity. They also repurchased $100 million of their senior secured notes in February 2025. This section talks about repurchase agreements. Essentially, if a dealer who bought RVS or boats from Winnebago using financing defaults, Winnebago might have to buy back those units. The total contingent liability here is huge, about $1.68 billion. However, they have a loss reserve for these, which was only $1.9 million. The good news is that the risk is spread out, and they believe this will not have a material impact. Breaking down revenue by product type, we see that both towable RV and motorhome RV segments saw increases. Within motorhome RV, Class A motorhomes and Class C and other motorhomes saw revenue increases, while Class B saw a decrease. This shift in product mix within the motorhome segment is worth noting. The marine segment had a modest revenue increase. Their effective tax rate was 34.8% in the recent quarter, up from 21.9% last year. This increase is primarily due to tax benefits from stock-based compensation in the prior year and the shift from a loss to income this year. They are also keeping an eye on new tax legislation that could impact their financials in the future. Finally, earnings per S-hair. Diluted earnings per S-hair came in at $0.19 for the recent quarter, a significant improvement from a loss of $0.18 per S-hair last year. This aligns with the improved net income. The management discussion section provides some context. They acknowledge the challenges from inflation, higher interest rates, and lower consumer confidence affecting demand for their products. They are working on managing dealer inventory levels and aligning production with demand. especially in their Winnebago motorhome business. They seem optimistic about the long-term demand for RV and marine products. The risk factors section is a standard part of these reports, and Winnebago has not identified any new material changes since their last annual report. They still face risks from economic conditions, financing availability, competition, supply chain issues, and potential warranty claims. This section details share repurchases. For the 3 months ended the 29th of November 2025, they repurchased a small number of shares, about 55,262, primarily to cover taxes on employee equity awards. They still have about $180 million left on their share repurchase authorization. Overall, Winnebago Industries Incorporated is showing a strong rebound in its financial performance for the recent quarter. The company has successfully navigated some challenging economic conditions, turning an operating loss into a profit. The towable RV and motorhome RV segments are performing particularly well, with significant revenue and profit growth. The shift in product mix within motorhomes favoring higher average selling prices is a smart move. However, the increase in inventory needs careful monitoring. The significant amount of goodwill on their balance sheet highlights the importance of successful acquisitions and brand integration. While debt levels are notable, the company has ample cash and an undrawn credit facility, providing a good cushion for liquidity. The repurchase of senior secured notes also signals a proactive approach to managing their debt structure. The company's outlook seems cautiously optimistic, and their focus on aligning production with dealer demand appears to be working. This report suggests Winnebago is on a positive trajectory, demonstrating resilience and strategic adaptation in a dynamic market. What is your take on these numbers and what they signal for Winnebago's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.